Welcome to our in-depth analysis of the Vanguard Total Stock Market Index Fund ETF shares, commonly known as VTI. This investment vehicle offers a unique opportunity to track the performance of the entire U.S. equity market. In this video, we will explore various aspects of VTI, including its risk and returns, portfolio composition, and management fundamentals. By the end, you'll have a clearer understanding of whether this ETF aligns with your investment goals. Let's begin by highlighting some key features of VTI. This ETF provides broad market exposure with a low expense ratio of 0.03%. It covers over 3,600 stocks, making it a cost-effective option for diversification. Over the past 10 years, VTI has delivered an annualized return of 12.89%, outperforming its category average. The fund's top 5 holdings, including tech giants like Apple and Microsoft, constitute over 22% of the portfolio. Now, let's delve into the risk and returns of VTI. This section will help us understand how the fund has performed historically and the risks involved. VTI has delivered a 10-year annualized return of 12.89%, closely matching the benchmark index. In the past year alone, it achieved a return of 40.38%, indicating strong performance. However, during market downturns like in 2022, the fund experienced a loss of 19.5%, reflecting its exposure to market volatility. In terms of risk, VTI has a beta of 1.01, suggesting it moves almost identically with the overall market. The fund's standard deviation is 17.83%, slightly higher than the category average, indicating marginally higher volatility. With a maximum drawdown of negative 24.87% between January and September 2022, VTI reflects the inherent risks of broad market exposure. Its Sharpe ratio of 0.42 suggests comparable returns for the level of risk taken. Next, we turn our attention to VTI's portfolio and holdings. What exactly is this fund investing in? VTI allocates 99.12% of its net assets to U.S. stocks, with minimal allocation to non-U.S. stocks and cash. This indicates a strong focus on the U.S. equity market. The fund's sector allocation is heavily weighted toward technology, at 30.47%. This overweight increases its exposure to tech industry movements, while being slightly underweight in industrials and real estate sectors. In terms of style, VTI emphasizes a blend investment style, combining both growth and value stocks. This provides balanced exposure across investment styles. The top 10 holdings constitute approximately 29.84% of the portfolio, indicating a moderate level of concentration risk. Notably, NVIDIA Corp has seen a remarkable one-year return of over 238%, contributing significantly to the fund's recent performance. However, this adds to concentration risk, especially with duplicated holdings like Alphabet Inc. Let's now discuss the fundamentals and management of VTI. Is this fund cost-effective and well-managed? With a net expense ratio of 0.03%, VTI is significantly lower than the average in its category, making it a cost-efficient option for investors. The management team, led by Gerard O'Reilly, Walter Nageman, and Michelle Louis, brings extensive experience, ensuring stability and consistent application of the fund's strategy. This long tenure provides confidence in the fund's management. Based on our analysis, what are the AI-generated recommendations for investing in VTI? For long-term investors, VTI's low costs and diversified holdings make it suitable for steady growth. Short-term investors may find its performance aligned with market trends, but should be cautious of volatility. Risk-averse investors comfortable with market-level risks will appreciate its broad exposure. However, risk-seeking investors might prefer funds with greater exposure to high-growth sectors, as VTI may not provide the desired level of aggressiveness. In conclusion, the Vanguard Total Stock Market Index Fund ETF shares offers comprehensive exposure to the U.S. equity market. With its low expense ratio and broad diversification, it has demonstrated strong long-term performance. While the concentration in technology stocks offers growth potential, it also introduces sector-specific risks. We encourage you to consider your investment horizon, risk tolerance, and portfolio diversification needs when evaluating VTI. For more such analysis of stocks and ETFs, subscribe to FinBriefs.